Good morning, everyone. How are we doing? Hey, Ian. Good to see you. Hey, Marcus. Good morning. Good morning. Okay. Well, short squeeze continues, my friends. The short squeeze continues. So we have a little news today, right? At 8:30, retail sales and all that good stuff. Bit of a slow, tight range this morning. Hey, Raj. How are you doing, brother? Let's get into it. Excuse me. You want to pay close attention to yesterday's structure. And, people talk about market structure, but they don't really tell you what it means. And it's really just the structure of the transactions. So it tells you where people are trapped, especially if they're trapped long, trapped short. Then that'll help you identify where the buyers and sellers are. So, for example, yesterday, these market profile, there's a set of single prints down here, and then there's a set of single prints here. And we've been kind of in those single prints. And what that means is when the market goes up and it takes out certain levels, it'll create basically the people who are short under that level, they will be trapped. And those are areas when the market comes down that you will look for buy orders, right? So if you were short here up at 69.83 and the market came down to 73 and you know the single prints there, you know that you got to cover some of your position. And if it breaks this overnight low, the next place that you'd be looking at is 69.55 because there would be bid to cover. Do you guys understand what bid to cover means? Just checking, right? Because a lot of people don't really know this. So when you take a short sale, you sell something you don't own. And then to close that trade, you have to put in a buy order and buy it back, right? And to flatten out your trade. So that's why short sellers support markets when they fall, because they come in and they put buy orders in. When the market sees those buy orders, it'll stop selling off and generally do that and move away from those buy orders to get them to try and chase price higher. If there's a lot of selling or selling competition, it'll break right through that level. And that's the same at any kind of level. The first people to come in and buy, and this is simple market mechanics that you will never learn in any other room, right? The first people to buy, first bid is always a short seller. Now, why is that? Now, after what I told you guys, it should be as obvious as the nose on your face, right? Because they got to close their trade. So they sold something they don't own, they got to buy it back, which means the order that they are going to create is a buy order. When buy orders don't get filled, they create support. Very simple. Okay, so that's what's going on here at the overnight low tonight, which is what, 69.72 and change. Though there are unfilled buy orders under here. Now, you guys don't know this because you don't trade size. So if I'm a size trader and I'm selling, right, from a long position that I bought here, and when I see a bunch of people lining up to buy, I will move my price up and see if they follow. Do you guys understand that? Does that make sense? It's about as simple as it gets. Yes? No? Anyone? Bueller? Thanks, Brian. Good. Basic, right? It's basic business. So inventory was short. It's now correcting higher. Let's see what we got to deal with here. Okay. So that is where we are, bird's eye view. Here are those single prints. You see that we couldn't come and fill them. Now, check this out, okay? We are in the single prints at nighttime. What does that mean? What is the common sense practical version, like the practical information? That means the traders at nighttime got all the cheap product. So if we open the market up here in RTH, these single prints are still valid even though they've been traded through in the overnight. Because it means the early bird got the worm and there might not be enough supply underneath 76 because somebody bought all the supply. That's why sometimes markets will fill those single prints at night and then bid up during RTH and not come and fill them. So those are not filled for the purposes of market profile. And the simple explanation is somebody got all the cheap stuff. So it's like Jiraj had a sale and he's selling maybe, I don't know, he's selling cars. And there were like 5 or 6 cars that were really, really well priced. The early people, the early bird got the worm, right? So always remember that this is what we strive to teach in this room. For those that are listening on YouTube, come join us at the Trading Syndicate. It will teach you how to use this information in a practical way, right? So there has to be some sort of practical execution that you can put into this, right? Otherwise, it's all just double talk, right? So where do you take the trade? You'd look to take the trade. Failure to sit, like this is a risky trade, but this is an old market profile trade. When traders fail to fill the single prints, they will buy like say this level and they'll put their stop here. Now, what's the business reason for that? The business reason for buying 73 is because that you see that there are unfilled buy orders here. So the business reason is that those buy orders are going to start pushing the market higher, right? If those buy orders get filled and we trade down to 71.70, then the business reason for going long and buying product at 73 doesn't make financial sense, does it? All your trades have to make business sense. If you're trading and you can't explain the business reason for why you're taking that trade, you have no business taking the trade. Because you're basically just throwing darts at a board, right? Make sense? You got to have a business reason to trade. So today's a little preachy, I know, because it's slow. Let's go take a look at our, I just want to help you guys keep it straight so you're not always turning and getting confused and trying to use things that aren't going to help you. Anything that somebody tells you in trading, your question should be, where do I take the trade? Where is my risk? What is the business reason for the trade? And where do I get out of the trade if this doesn't work? If they can't answer those questions, right, in an intelligent, simple manner, they shouldn't be teaching you, right? There is no reason, right, for taking trades that don't make any business sense. Let me just set the view app here. VWAP is anchored. I always anchor VWAP at 6 p.m. New York time, 2300 hours UK time. And we're just kind of going back and forth into this balance zone. Let's see if we hold 68, 69.81. Sure, a P profile is short covering, right? And a B profile is liquidation into wholesale hands. Very simple. So let's go take a look. So yesterday, you're right. This is a P profile. Right? It looks like the letter P. The shorts are trapped at the base of the letter P. Right? This is a B profile, which means there is liquidation from the people trapped here and it's being caught. Right? You're not wrong at all, Redcom. Not wrong at all. So we have we had a short squeeze yesterday. Tonight, under the cover of night, have you ever heard that term? Tonight, the traders who got caught short are trying their best to cover. But unfortunately, at 69.72, the large wholesalers don't need to sell underneath 69.72. Make sense? Right? You only need to sell a stock or a future or anything at a lower price if other people are competing with you and you are forced to lower price. Right? Otherwise, you will sell as high as you can for as long as you can. Right? That's how business works, right? I mean, will Apple rather sell an iPhone for $1,500 or $600? These are not rhetorical questions, folks. You guys still have the Super Bowl hangover, eh? So yeah, so that is a P profile, that's a B profile, right? So a B profile happens when there's inventory above and it sells into that B, and that's accumulation, right? Market profile, people say it's liquidation, but they don't tell you the full story. It's liquidation into wholesale hands, right? Right? This is a wholesale business, right? This is a business where wholesalers move size according to the order flow that comes in. And if you can keep track of that, you're doing much better. Now, let's go talk about trading, okay? When to trade, when not to trade. This, you don't trade. This, you don't trade, right? This kind of market, when it's really slow, scalping, do you notice that there's no, do you understand that there's no follow through? So the only way to trade this is to build a position and then sell into strength. Just Redcom, just focus on 69.71, the bottom of the single prints, because that's where the buy orders are. Now, I've told you about P and B profiles. Now, don't go down the rabbit hole with these things too much. You know what I mean? You understand what they are. Now what you need to do is look at your candles. This is why market profile traders don't make money, because they're pure market profile traders, because they get lost in the minutia and tiny details of this profile speak, right? That's why I put a 1-minute candle chart for execution. So market profile is a map of the city. So we're at 69.82. Now if you want to see what's going on in that neighborhood of 69.82, you go to the candle chart. And the candle chart's telling you you'd be a fool to try and scalp this because the candles are so tight and there's nothing to do. Does that make sense? Right? Because you're a scalper or you're a short-term trader, your job is to identify, number one, where is the inventory? Well, it's below us now, right? The inventory is priced at 69.79. We are above that and we are distributing that at 69.82. That's simple commerce. That's how business works. You buy cheap crap, you sell it at a higher price. Now, that's number one. Number two, what do the candles look like? Well, they're really tight. Is there opportunity there as a scalper? No. So, number three, what do? You relax. Sometimes in this market, you have to understand that there are business transactions that are taking place that you should not go stick your nose in because you're just going to get your nose cut off. This is why retail traders lose money, because they're trying to trade a market where they're not supposed to be trading. So the number one thing is to realize, look at the price action. When we first went and looked at that profile chart, you saw that B profile, very tight range, 69.72 to 89. It's a tight range compared to yesterday and the day before and the overnight yesterday. The overnight yesterday is completely different than the overnight tonight. Make note of that. Because it's one thing to trade a chart or a moving average or whatever there is. There's nothing wrong with that. But you guys have to have some kind of situational awareness as to what the hell's going on. Does that make sense? Okay? So when it's like this, there's nothing for you to do. We'll wait 10 minutes and see if London opens. If London continues to give us 1 point, 2 point candles, we'll cut the session short and go relax and trade later, right? Here's the thing. If you're always clenched up looking for a trade and you're searching and you're searching and you're searching, you're like Terminator. The problem is you're not a robot. You're a human being. That searching and digging and grinding when business is not good is really, really exhausting mentally and financially, right? And that is where I have a saying that we should use trading psychology before we lose all our money. Instead of going and looking at trading psychology and going, oh, I blew up my account, I need trading psychology. How about let's use a little common sense? Let's use a little common sense, right? And then use the trading psychology to keep us out of trouble. And it's really funny, I asked a very preeminent trading psychologist, hey, how about we teach people trading psychology in a practical way so they can use trading psychology before they blow up their accounts and destroy their lives? You know what she said to me? She said, I don't think that would work. I think she's wrong. Do you really need to lose your house in order to learn how to trade? Because that's not how it works in the business. When you start working at a brokerage firm or a hedge fund, they don't go, here's $1 million, go lose it. It doesn't really make sense in business, doesn't it, to lose money on purpose? I don't know. Tell me what you guys think. Maybe these questions are too much for first thing in the morning, right? maybe it's a little too much. Like, okay, JJ, you're a little too much here, right? Yeah, but that's not how. But listen, Ian, here's the thing: endorphin rush and quick wins. That's okay, but hey, what about business? Like, if you were baking bread, would you be baking bread for an endorphin rush? If you were a surgeon, would you be doing heart surgery for an endorphin rush? If you were an accountant, would you be doing an audit for an endorphin rush? Do you see how ridiculous it sounds to take that extreme sports and put it into a business model, right? This is what I don't figure out with people, right? I just don't get it. And I've been doing this for 34 years, and I've been working with retail for like 10 or 12 now, and I just don't get this whole endorphin rush thing. Because in business, there's no rush. There's, being disciplined and doing good business. I don't get it. So I'm confused, right? JJ's a little confused. Right? Anyway, that's my 2 cents this morning. Try and keep people from losing all their money. Right? That's all I really care about. Right? I want you guys to be able to keep your money. Right? I hate seeing people lose money unnecessarily. Drives me crazy. Right? See, look at this. So, if you're really bored, you can see that there's a seller right before this level. See the tops of these candles right here? You can see that there's a seller right there. Right? So, if you're really bored and you really want to understand how order flow works, you can draw a line where the sellers are and see if the market gets over that and offers and prints over it. Right? But to take a trade, right? It's like, say you're selling sunglasses and it's raining, right? And you're out there just hijacking people and go, you got to buy some sunglasses, right? Once you guys see how ridiculous things look in a common sense perspective, you're going to take way less bad trades. Does that make sense? You will only do business when you see that the terms and conditions of business suit you, right? I only do this. You show me this business opportunity, you get my money. If you can't show me an intelligent reason for taking this trade, you're not getting my money, buddy. Right? Don't fall for this. So you can see that now the sellers have lifted their prices a little bit. Let's see what happens when London opens. London usually likes to go lower and get some cheap inventory. This creepy price action is so, it's going to drive you nuts. Yeah, yeah. Chart replay is the best, right? Because then you understand the different types of business going on. Sometimes business is slow, right? Sometimes business is slow. Say you're working the night shift at 7-Eleven and nothing's going on. You okay there, Juan? You're asking all a little off the rails this morning, brother. What's going on in San Diego? No, there's no beach here, my friend. Any questions, you guys? That's why, ladies and gentlemen, we really, really want to focus on execution, right? Theory is great, right? Levels are great, theory is great, but execution is the devil's in the details, you know? Execution is everything. You know, what is the business reason for taking the trade? Where does the trade not make any sense? It is. It's not easy, Moran. Not easy at all, this business. It's one of the hardest businesses in the world. It truly is. If you think this is hard, try it on the other side of the desk, right? Try working at a brokerage firm where you really, on a trade desk, you are like seriously one trade away from being escorted out of the building. It's not a genteel business. If you don't produce, you're gone. If you screw up, you're gone. That's why when people are like, "Oh, it's okay to blow up accounts," no, it's not. Okay, back to the sellers. There's nothing going on here. Now London's opening, right? Let's see. Yep. And that's why you got to practice that execution 1,000 times over, Jiraj, so you can scratch your trade before it gets to your stop. After a while, you'll just know. You're like, oh my God, this is not a good trade for me to be in. It's okay, Moran. Brokerage firms they're not an easy place to make a living. It's very cutthroat. We'll give it a few more minutes and then we'll shut this session down so you guys can go and enjoy your day. Go to the gym, go do something, have fun. It's pretty slow. Seller's still at the same place. Here comes London. Let's see if it can take out the low of K period. That's what we're looking for now. Here we go. Drop it in. Right to VWAP. I did not take that short. Yeah, as the entries get better, you'll worry less and less about stops. That's very true, Raj. Very true. Very true. Little touch of VWAP, bounce off of VWAP, seller at 81 now. Not much going on. Yeah, if there's no setup, go to the gym. Not much going on today, ladies and gentlemen. Give it some time. Go relax. Come back in an hour or two. As more people wake up, price action should be better. Okay? That's pretty much for me this morning, ladies and gentlemen. Go enjoy life. Thanks, everyone. Come visit us at the Trading Syndicate. Enjoy the downtime. You know, when it's slow like this, it's good. You can relax a little bit, let your brain kind of get back to normal. All right. Have a great morning, everyone. We will see you at 9 o'clock. We should get some better price action as RTH approaches. Stay out of trouble out there, okay? Come join us at the Trading Syndicate. Those of you watching on YouTube, if you really want to learn how to do this and make money. Thanks, everyone. Have a great morning. We'll see you in a little bit. Bye for now.